welcome to both of you. I'm joined by Elodie Laugel, Chief Responsible Investment Officer at Amundi, and Amundi's Group Head of Emerging Markets, Yerlan Syzdykov. Thank you for joining us this afternoon. So, as we saw from, or heard from the interviews we just witnessed, emerging markets play a critical role in making the transition happen. So, what are the main dynamics in emerging economies' energy transition markets, Yerlan?
Indeed, emerging markets play a key role in energy transition, and not just because of the size of their economies and respective carbon footprint, but also because emerging markets are in a unique position to provide enabling technologies and also materials. In terms of the themes that we're playing, and I think investors can really be interested in, we can really create 5 interesting clusters of themes in terms of transition. Theme number 1, what we call future fuels and sustainable agriculture. This is, of course, the theme that is focused more on Brazil today. There are opportunities in Brazil. In future, we think maybe Ukraine can join this opportunity, of course, post-reconstruction. Theme number 2, we're looking at enabling materials. These are critical materials that are needed for us to support the greening technologies. And the countries that we can say investable and interesting from that perspective are in Latin America. We have Indonesia and we have China. Theme number 3, carbon offsets. I think this is a growing theme that allows us to encourage the tradable market in carbon offsets, but also encourage us to create reforestation and carbon capture throughout the emerging world. Theme number 4, we have, again, thinking about carbon, is carbon efficiency, a theme that is focusing on technologies allowing us to move to lower carbon footprint of the existing manufacturing technologies. Specifically, as an example, moving from coal to gas, for example, and countries which could benefit from that from investments perspective are India, China, South Africa. And the last, and of course not least, is a very interesting theme that we all talk about is clean tech and green mobility. This is the area dominated by China, and despite recent setbacks because of the protectionist moves from the developed markets, I think we still believe that this is going to be, in future, a viable and interesting opportunity for investors to exploit.
Thank you very much, Yerlan. What's key to accelerate the transition is, of course, capital. So, Elodie, when it comes to climate financing in emerging markets, what are the main dynamics at play and the main changes happening?
If we look at the global climate finance in 2022, it reached $1.3 trillion. It's twice, actually, the amount we used to observe, so a good momentum. However, it remains very far away from the financing required needs that are estimated between 5 and 7 trillion of investment per year to green the economy. And if you look at this positive growth that we observe on climate finance, actually it's mainly due to an increase in clean energy investment, which is good as well, but in a very limited numbers of countries. It's China, US, EU, India, Japan, roughly, and primarily from domestic funding. So ultimately, we can see on climate finance a very, I would say, significant positive dynamic, but flows continues to fall short of needs, and in particular in developing and low-income economies. So what do we need? To name a few, it's not exhaustive. First, to mobilize the domestic finance. You have a significant part of emerging market needs that could be addressed by local sources. Second, to increase the contribution of multilateral development bank and development financial institution. Third, to accelerate on the climate private finance, and from notably the private financial sectors having net zero commitment. And finally, to expand the spectrum of financial instruments to attract private capital with solutions like public-private partnership or the expansion of the green, social and sustainability bond market.
Thank you very much, Yerlan. With regards to different instruments like public-private partnerships or green bonds, what trends are you observing right now, and how can investors facilitate and encourage the use of such instruments?
Yes, whereas green bonds remain the largest opportunity set in emerging markets, and I think globally, with global issuance last year reaching again $1 trillion, which is really a good sign. I think we have emergence of other and proliferation of other instruments. Elodie already mentioned sustainability-linked bonds, which has been growing significantly, especially in 2021, despite of the setback last year where we had only about 53 billion issuance of that instrument. I think that still is the market that will grow. We have emergence of interesting opportunities in what we call blue bonds, which effectively also arise from the fact that we were from the process of restructuring of some of the low-income countries' debt. Recent example was the restructuring of Belize debt, where we effectively received 15% of GDP in terms of debt relief in exchange for marine conservation projects that the country decided to commit. So I think these elements will continue playing out. And you mentioned private-public partnership. I think to us it's extremely potent theme, because on one hand you have public investment in green technology and energy transition, which is surpassed and dominates in emerging world majority of spending in that area. But we need to say that, of course, we need to consolidate more of our efforts towards encouraging private investments in green transition. We cannot live without public money, because it's vital role of de-risking and also mitigating the cost of financing, which has gone up recently for a lot of emerging markets. So I think what I would like to say for our partners, our investors globally, is that we really need to confront not only greenwashing, but also greenwashing, and we also need to invest more in Article 8, Article 9 funds, net transition funds, net zero funds. So I think that would be on my wish list towards investors, and this is the way that investors can participate in green transition.
Thank you for this worthwhile message indeed. Elodie, to conclude what's a conversation that is way too brief, of course, as an asset manager active in public-private partnerships, what lessons can you share with investors, and what's the future for climate finance?
Public partnerships, or the short name being PPPs, actually prove to be beneficial in emerging markets for financing needs, with key lessons learned, and I will name a few. First, as mentioned, the risk-sharing mechanism that are part of the partnership really enables to attract private capital. It's really one of the key lessons learned. Second, when it comes to risk analysis approach, it has been mentioned in the table before, it has to be differentiated for each program, taking into account geographical context, market maturity, local political systems. When it comes to ESG consideration as part of this program, there is no one-size-fits-all. It has to be adapted for each project, in particular when, I would say, standards and framework are lacking. And ESG eligibility criteria have to be adapted to the targeted geographies. Third, what has been very, I would say, essential and what is very essential in this partnership is a technical assistance that is brought by the partners, and that is really essential to accompany issuer companies in this issuance process. So ultimately, we have this partnership, which is a good example of innovation enabling to attract private capital. It's not the only approach, and as climate finance is constantly evolving, I would say that we, as investors, should be ready for this innovation.
Well, I'm sure they heard the message there again. Thank you very much to both of you for your insights on climate finance and emerging markets. Thank you very much.